And so a lot of us don't have another 36 years for that. As of this recording, I'm 40 years young. I don't want to wait another 36 years. And now I'm the right young age of 76, which is still relatively young. My grandmother, as of this recording, still living 100 years young. But boy, I don't want to wait till I'm 76. No, so we want to compress time frames. So what we want to do in GTF is we want to leverage, as of this recording, we've got an auto-piloted trading system in the foreign exchange market. By the time you see this recording, there may be other vehicles that we have. But we want to condense time frames. So instead of 6% a year, maybe it's 6% on average every quarter. Well, now all of a sudden, instead of this taking 12 years, it's taking 12 quarters to double our money. All right, that's only, what is that? That's 4 quarters in a year. That's only 3 years. So now our money could be doubling every 3 years. Or maybe we can get an average of 6% every 60 days or so. That's really about 3% per month. And now it would only take about 24 months, all right, for our money to double. So we went from maybe 12 years at 6% a year to potentially, maybe, perhaps, we can't guarantee any performance. Maybe we're getting 6% a quarter, so we went from every 12 years to every 3 years, maybe doubling our money. And then if we were able to accomplish that every 2 months, then we went to every 2 years doubling our money. And what we're really targeting within GTF with the trading systems we have, we can't promise these performances, okay? But we're targeting 6% a month. And there'll be months that we will blow through 6%. There'll be months we'll do 20%, 25, 40, sometimes 50% or more. And there'll be months where we'll be down 13, 20%, okay? But ultimately, once the dust settles over time, this is not a get-rich-quick anything. Over time, we'd like to do 6% a month. Now, if we did 6% a month, let's just see what could happen. And I won't put ages here because I know that not all of us, once we get off this video, are going to be 29. All right, even I won't be 29 once this video ends. So I may try to lengthen this video so I can remain 29 as long as this video is playing. I'm 29, right? Okay. Let's say that you got to the point. All right, you got to the point where you had $5,000 of risk capital. You have $5,000. I tell you what, better yet, I'll do this. Our current flagship trading system requires a minimum of $3,000. A minimum of $3,000 to fund your account to participate in that auto-piloted trading system. Okay, and so let's assume that we were able to, over time, average the 6% a month. Right now, I'm going to assume that we're allowing this to grow a little bit, though in time we want this to be a cash flow account where we can take out some money to assist us with our lifestyle. But we want to get to the point where it's grown to a point that ultimately this vehicle can become an income stream for us. At 6% a month, we're going to assume that you start off with $3,000. We're going to assume that we get a hypothetical 6% a month. And at the end of, let's say, 12 months, roughly, you would have $6,000. And this is simply not adding, not taking away, your $3,000 becoming $6,000. Okay? In 2 years, your $6,000 becomes $12,000. In 3 years, your 12 becomes 24. In 4 years, it becomes 48. This is assuming that we average 6% a month. We didn't touch it. Of course, your situation will vary, okay? 96,005. Excuse me, I'm not used to these numbers. I think that's 192. 192,000 in 6 years. And I will require the assistance of my calculator. 384,000 at the end of year 7. At the end of year 8 in this example, 768,000. Let's take it out to 10 years. 1.5 million. We'll just round that and call it 1.5 million, which now means in 10 years, in this example, $3 million. Now, here's what I want us to get. Here's what I want us to get. While in this example, if we double our money every year, utilizing a combination of the systems that we have here in GTF, whether we have them now or whether they will come down the road, and maybe something else because of GTF, you become more financially literate. Maybe you find something that has nothing to do with GTF. By all means, go for it. Okay? Now, we always want to use risk capital, but see, this makes sense. For me to take some risk capital, whether it's $3,000, $30,000, $5,000, monies. I don't ever want you borrowing money to do this. If you don't have $3,000 now, follow along with us here within GTF. Optionally participate in our affiliate system where you can share our message with others and generate some revenue, which is one of the reasons why we set this up in a private affiliate manner, which is absolutely optional. Obviously, you don't have to refer anybody. All right, but look, this is with $3,000 of risk capital. This $3,000 or $5,000 or $10,000, whatever your number happens to be, this would be money that I'm not needing. You're not needing to pay your mortgage. This is not money that you have to have in 6 months or a year. This is money that's risk capital. And what we're looking to do with this money is we're looking to put it in a more aggressive vehicle, understanding that typically when you deal with investments, there is a risk to reward correlation. And basically, it goes like this. The lower your risk, the lower the risk to your principal, the lower your reward. This is why in a U.S. bank, when you go and you get a certificate, you go and get a CD. You go and get a certificate of dung. Do you know what dung is? Do you know what dung is? Yeah, there's an expletive that oftentimes people use for dung. You got it. You got it. My mama may be watching this video, so I'll leave it at that. I don't want her to get me, okay? A certificate of dung, a certificate of depreciation, where you're locking up your money. You're locking up your money for sometimes 2 years, 3 years, 5 years, 6 years. But hey, it's FDIC insured. It's safe. Well, because you have a low risk vehicle, and there is a place for low risk, low return vehicles. But just understand that low risk, low return vehicles are not going to free you financially. So we take a very small part of our portfolio. If you don't have it now, let's create it somehow. Money is only an idea, as one of my mentors would say so often. Another buddy of mine said, hey, if you want it bad enough, you'll find a way. I don't want that way to be you getting in debt. If you want it bad enough, you'll find a way. He said, if you didn't find a way, it's because you just didn't want it bad enough. So what happens is, the lower the risk, the lower my reward. The greater the risk, when I'm willing to take on more speculative risk, our trading systems are more speculative. We can't guarantee principal. Could we ultimately lose this entire $3,000? Wouldn't be excited about it, but yes, it could happen. This is why I only want you putting risk capital in the market. Now, it should never have a blow up where you have one trade and you're out of the game. Okay, that should never happen with the risk management tools that we use in our trading platforms. However, yes, this is risk capital, but it gives us greater potential rewards. Ladies and gentlemen, when I started learning this in 1994, and I met Dale in 1998, please make sure you watch our video where we kind of share our story. And Dale was 35 years young, and neither he nor his wife worked outside the home. So he was a stay-at-home husband and father. She was a stay-at-home wife and mother, and he was trading the stock market, and he was supporting his lifestyle, had a 6 $100,000 square foot home in the high rent district, although he was not renting, obviously, in the high owned district of town, 35 years young, supporting his lifestyle from profits he made trading in the stock market. He wasn't investing just for the long haul. Again, we believe in long-term investing, but we believe it works best when you already have a lot of money. And ultimately, in our trading systems, we're going to be involved in our trading systems for the long term, but on a short-term basis. We're going to be involved in our trading systems for the long term. I'm only 40 years young, so I'll be involved in trading systems until I get out of here, which I hope I've got, my grandmother's 100. I'd like to see another 60 years on this side, okay? Well, however long, I know I'm going to be involved in some form, some fashion in the markets, the global financial markets, okay? Look at this, ladies and gentlemen, as we start the round third. While, yes, we got to 3 million in 10 years in this example, did it take us 10 years to be able, if we were doubling our asset base, our liquid asset base, did it take us 10 years to be able to have freedom? I mean, think about it. If you had a $192,000 account and it made $192,000 for the year, could you take out $192,000 in profits and live a pretty decent lifestyle? Some of you could do that with $96,000. Some of you could even do that with $48,000. So my point, ladies and gentlemen, as we call the end from the beginning, as we start with the end in mind, GTF's trading platforms, our trading systems, our target is a minimum of 6% a month. Excuse me there. Sorry about that. That was a little hiccup about to come through. Our target is 6% a month. It doesn't mean that every month is going to be 6%. We can't guarantee performance. Maybe one month it's 2%, but then maybe it's followed up with a 20% month. Or maybe that's followed with an 11% down month, which is followed up with a 36% month. But over time, we want to average 6% a month. And if we allow it to compound for a period, now I will say, we'll have another video talking about principal neutral. All right, so make sure you watch the video where we explain what principal neutral means. I will say what I really want you to do is when you commit funds to the market, and let's say that we're fortunate and we do double our account, I do want you to be able to take a portion, if not all, of your original principal out. That way you're playing, if you were going to a casino, you would be playing with a house's money, as an example. In other words, if I put $3,000 in the account, it's now $6,000. If I withdrew $3,000, then what I have remaining is all profits. And even if we win some, lose some, I can't get hurt from my original principal. That, ladies and gentlemen, is what our target is to get the money working for us. Here, maybe it's going to work for you. Here, it's going to work for you. Here, it's going to work for you, so on and so forth. All right, ladies and gentlemen, with that being said, this is T. Lamont Silver Sr. saying, let's change the world together, starting with yours.